Have you ever thought there might be a glitch in the global financial system? I mean, a really big, expensive one, just hiding in plain sight? Well, today we're pulling back the curtain on exactly that, a $27 trillion problem that touches almost every part of global business.
Yep, you heard that right. $27 trillion. Just to give you a sense of scale, that's bigger than the entire annual GDP of the United States. And the craziest part? This money isn't lost. It hasn't been stolen. It's just stuck. So this raises some huge questions, right? Where in the world is all this cash? And why is it just sitting there, tied up? And maybe the biggest question of all, what could happen if we finally set it free? Well, that's the mystery we're going to solve today.
All right, here's our game plan. First, we're going to get a handle on just how big this problem is. Then, we'll unmask the culprit, a banking system that's, well, a little old. We'll break down the costs, look at a really cool high-tech fix, see who's leading the charge, and wrap up with what this all means for the way money moves around the world.
Okay, first up, let's really dig into what's going on with what is probably the world's most expensive traffic jam.
Now, here's the crucial thing to understand. This money is parked on purpose. It acts as a mandatory safety net, a settlement buffer. You see, the current global payment system is so slow and clunky that banks have to stash cash in accounts all over the globe, just to make sure that when you send money from, say, London to Tokyo, it actually gets there. It's a feature, not a bug, of a system designed decades and decades ago.
And that old system? Well, that brings us right to our next section. It's time to investigate the real culprit behind this $27 trillion logjam.
The name of the game here is correspondent banking, and honestly, the best way to picture it is like a long relay race. For a bank in New York to send money to a bank in Dubai, there's no direct line. Instead, the payment gets handed off from one intermediary bank to the next, and then to another until it finally reaches its destination. So you kick off the payment, and it starts its journey getting passed along like a baton from bank to bank. Every single one of these handoffs takes time, it adds fees, and it creates uncertainty. And what's the result? A simple international payment can take anywhere from 2 to 5 days to actually settle. In our instant everything world, that's just wild. Now, to make this whole relay race work, banks use these special accounts with some pretty old school names, nostro and vostro. But don't worry, it's way simpler than it sounds. Nostro is just Latin for ours, so it's our bank's money sitting in their bank. And vostro is yours, so it's their bank's money sitting in our bank. It's just a system of ledgers that keeps track of all that buffer cash we talked about.
So you've got this slow, complicated system. And as you can probably guess, all this waiting and all this complexity, it isn't free. In fact, there's a very real and very high hidden price tag attached to all this inefficiency. It really breaks down into 3 big costs. First, and this is the big one, is lost yield. I mean, if you're a major company and you have $1 billion just sitting in an account doing nothing, in a 5% interest environment, that's $50 million a year in lost opportunity, just gone. Second, you've got all the operational headaches, the compliance, the monitoring of managing these accounts. And third, the whole process is a black box. Each bank in the chain takes a little slice in hidden fees and currency exchange spreads. Okay, so let's recap. The system is slow, it's incredibly expensive, and you can't really see what's going on. It's a bit of a mess. But what if there's a better way? Let's talk about the high-tech fix that could make this whole problem disappear. And folks, the difference here is truly night and day. With the digital settlement system, a process that takes days suddenly becomes instant. That whole chain of intermediary banks? Gone. You have a direct connection. And the most important part, because it's instant, that massive $27 trillion buffer we keep talking about, it pretty much vanishes. You just don't need it. So, how does this all work? Well, the secret sauce is a concept called atomic settlement, and it's revolutionary. It means the payment for an asset and the transfer of that asset happen at the exact same time on the same platform. There's no waiting period, no risk that one side happens without the other. It's an instant, guaranteed swap. And look, this isn't some far-off science fiction concept. This stuff is being tested in the real world right now. A great example is Project Enbridge. It's basically a shared platform where multiple central banks can deal directly with each other using their own digital currencies. It's proof that this can work on a massive international scale.
Now, if this technology is such a game changer, you have to ask, who's jumping on it first? You might be thinking Silicon Valley or maybe Wall Street, but the region that's really moving at lightning speed on this is the Gulf Cooperation Council, the GCC. So why them? Well, when you think about it, it makes perfect sense. Their economies are built on massive international trade flows. Think huge energy exports. Plus, they're pouring money into giant infrastructure projects and working hard to diversify their economies. For them, making payments more efficient isn't just a technical upgrade. It's a strategic weapon to sharpen their competitive edge on the world stage. And this isn't some new fascination for them. They've been playing the long game here. It goes back to early experiments like Project Aber between Saudi Arabia and the UAE. Now fast forward, and they're key players in global platforms like Enbridge. This is a clear, sustained, strategic push to build a financial infrastructure for the 21st century. So, let's zoom out. We've seen the problem, the solution, and the early pioneers. But what's the so what for the rest of the world? This is about way more than just faster bank transfers. It's about fundamentally redrawing the map of how money moves around our planet. The ripple effects would be systemic, absolutely huge. Banks could finally free up and put to work enormous reserves of capital. Corporations wouldn't have to keep so much cash parked overseas. They could use it to invest and grow. And with fewer middlemen, the whole process gets cheaper, faster, and way more transparent for everyone involved. There's this quote that just perfectly captures the shift. We're talking about upgrading the world's financial plumbing. It's about moving from a system that operates at the speed of paperwork and bureaucracy to one that operates at the speed of light, the speed of data. And that leaves us with one final, absolutely massive question to think about. What happens when that $27 trillion stops sitting on the sidelines and gets back in the game? What new businesses get funded? What new projects get built? How much faster can our economies grow? What happens when $27 trillion stops waiting and starts working?